Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Friday the 4th of September. Starting off with Alba Minerals, where we've been following the move higher over the last month or so. The initial target here was the top of that rising trend channel from March at 0.17. Obviously, we hit that end of last month and came back a bit, but remained... old resistance became new support. The old August resistance became new support, and we're back up again. End of day close today above 0.17 should be enough to take the shares up for a new leg to the upside up towards the November, top of that November trend channel, perhaps as high as 0.3 pence. If you're a bit squeamish about the shares, maybe wait for 0.19 to be broken on an end of day or weekly close basis. But looks as though 0.17 should be enough, and at least while we're above the June resistance of 0.15, the bull argument remains very much intact. Next up, a stock which I can see that people on social media are quite pleased about. Slow move up here, which is perhaps more suited to some. So a gentle sort of slow burn move to the upside. Got a rising trend channel on the daily chart from April. The top of the channel currently pointing at 9 pence, and the floor of the channel around 5.5. So above 5.5, looking for 9. If you're a big fan of the shares, up to that September resistance line projection at 10 pence could be the destination, perhaps by the end of next month. But everything they're hinging on 5.5 pence. Holding. Stock where there's been, looks like there's been a bit of a bear trap, and a bear trap rebound, in fact, is Besant. Here we had, 2-3 days, or at least a couple of days, below the post-May support, so that call that around 0.09, and then we've sort of flipped back again now. An end of day close back above the 50-day line at 0.11 should be enough to give confidence that we're back in recovery tack. The top of the channel there from March up to 0.2 pence, and at the moment, obviously, while we remain above 0.09, looking for that 0.2 pence target on Besant. Stock which can't remember if I covered or not, but it looked rather appealing. I think it has very few shares in issue, so that was an appealing part of it. But Blue Rock Diamonds, the falling wedge break came around 40 pence in the middle of last month, and we've obviously put on a decent amount since then. Big figure target is up to the top of that broadening triangle from March at 100 pence, so that's hopefully a 1 to 2 month target. And the upside really valid, I suppose, while we hold above the 50-day moving average, currently at 43 pence, and that would probably be the best stop loss, a trading stop loss on the long argument if you are trying to chase the 100 pence level. Barron Oil, not an easy stock to chart, all over the place. Not quite sure about this little spike that on the chart that's shown there today, but basically we've got a rising trend channel again, once again from March. Most rising trend channels are from March for obvious reasons. So above 0.09, looking for the top of the channel as high as 0.18 for Barron Oil, but obviously the trajectory on such a spiky stock is going to be problematic. A nice eventuality today would be an end-of-day close through the August intraday resistance at 0.115, which is obviously near to where we are at the moment. Saw somebody asking about Live Company, get the name out. Here it does look interesting, actually. Obviously, it's been a rather torrid run over recent months and perhaps even years, but looks like we've finally broken out of this triangle from June, bounced on the extended bounce on the 50-day moving average at 9.5 pence, and while we're above the 50-day line, looking for a top of April trend channel as high as 24 pence over the next, let's say, 4 weeks, something like that. Clearly an end-of-day close today, above 12 3/4, the August peak would be useful to the cause, but really it was the break of that resistance line from June at 11 pence, which has done the job, and while we remain above 11, we'd be looking for an acceleration to the upside for live company. Not in alphabetical order for some reason. We've got Iconic Labs. Here it's just worth noting the way that although we had the false break last month, we've maintained support at this gently falling line from April. That runs through about, I suppose, around the 0.09 area, 0.009, I think. But basically above 0.01, and the recent support, looking for further gains. Initial target, obviously, the August peak at 0.025, but the big target here, if this is finally the end of the consolidation, would be a move to 0.05. Apologies for the getting tied up with all the numbers there. Rather more simple is Codal Minerals, which is just a great breakout situation. We had the gap through the 50-day moving average, which is regular watchers of the Bulletin Board Heroes will know is one of the setups that tends to work rather well. So we had that for the 1st of September, and obviously the week since has seen the shares soar. The initial target here is 0.2 pence, while we hold above the old 0.11 pence peak from June. If you're a fan of the stock and want to dream of the stars, well, the target here as high as that July resistance line projection at 0.3 pence. But initially 0.2, best case scenario, let's say by the end of next month, up to 0.3, and the stop loss back at 0.11 on Codal. Don't normally look at retailers, especially retailers which haven't been doing very well, because obviously bad things can happen. But just interesting that Mothercare has been in this little flag formation, consolidation formation, either side of the 200-day moving average at 9.91 pence. You can get an end-of-day close or end-of-week close today above that particular feature. One would be looking for further gains up towards the top of that March trend channel, currently pointing at 15 pence. This stage, really back below the 2-day consolidation, 2-day floor at 8 pence really kills the upside scenario for Mothercare. Stock which I haven't covered very much, but is here today is Reach. Here we've got a gap through the 30-day moving average, breaking that falling wedge as well, which is a nice thing to do. And really, while we're above the 20-day line at 54 pence, looking for further gains. Clearly, there's resistance between 80 and 90 pence, which is June-July resistance, and that would be the initial target, while we hold above the 20-day line. Best case target here up to the top of that broadening triangle from April, as high as £1.20 on I suppose, a 1 to 2 month time frame. But this falling wedge break does look very encouraging indeed, especially as it's got a bullish divergence in the RSI window accompanying it. Just a couple of stocks to go, both ones which are much talked about at the moment. First is Valerix, where we've had beautiful move here to the upside, and I suppose the feature and the reason for the inclusion today is the way that we're holding above, so far holding above the old May 23 pence peak. If we can continue to do that, then the target here could be towards 31, 32, maybe even 33 pence at the top of that rising trend channel from July. So above 23 up to perhaps up to as much as 33 pence over the next week or two. Finishing off with Vela, which I'm glad I covered a few days ago, because it was we're looking rather sickly and possibly a brave thing to do at that time. But we had that, like in the case of Besant, we had that sort of probing below a previous support, and the shares pushed back higher, which is encouraging. Probably want to see an end-of-day close through 0.06 back above that broken support line. If we can get that, then the eventual target here could be a return to the post-January resistance at 0.1 pence. So at the moment, at least while we're above 0.05, looking for best case scenario target over the next couple of months as high as 0.1 pence for Vela after the bear trap. That's it for me today. More updates on Monday.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.